What's up, everyone? All right, happy Halloween. We made it to the end of October. Thank goodness, because this month was not easy. I'll be happy, just forget it, make it water under the bridge and let it go. It began with a small green week, the first week of October, and then going into the second week, on Tuesday, October 7th, I had a $172,000 red day, the second biggest loss of my career. Devastated. I spent about 2 weeks recovering that loss, which left me with this final week of the month to try to add a little profit to the month, basically. And I am green on the month, but boy, not by much. And this week didn't serve to add very much at all, because I was green on Monday, but then red on Tuesday, red on Wednesday, no trade Thursday, no trade today. And that is in spite of right now seeing a stock squeezing up over 200%. So I'll talk about why I did not trade this stock, even though it's making a big move. And I'll also talk about what I expect will be the catalyst that ignites the next round of momentum. Okay, so if we jump onto the screen share here, you can see HKD is squeezing up. And yet, this stock does not meet 5 pillars of stock selection because the float is too high. It is a former momentum stock. This is a stock that, in fact, made a really incredible move back in 2022. It went from about, I don't know, $5 to $10 a share, all the way up, not to 100, not to 200, not to 300, not to 500, not to 1,000, but all the way up to over $2,500 a share. And yet, if we look at that day that it hit those incredible levels, the volume was 350,000 shares. That was it. Wow. So it was extremely thinly traded. And although it squeezed up, it came all the way back down here and has just been basically, dead for a long time. So over the years, the float has increased as the company has sold additional shares on the market to raise money. And so today, when I first pulled it up and I saw that it was popping, I thought, well, at this point, it's a 124 million share float. That's going to just be too high. I really didn't expect this type of momentum, even though it has a history of having made a big move back in 2022. Because the float was this high, I didn't think it would work. So the fact that it is up this much and currently has 143 million shares of volume, I think speaks to the fact that traders are here. They're waiting for something to jump into, and people were willing to pull the trigger on this. Now, I was not. For me, having been red on Tuesday and Wednesday, I don't want to have a third red day in a row. So I took no trades yesterday because nothing was perfect, and I took no trades today because nothing was perfect. So flat is better than red. If I had traded this and lost, I would have just been, I would have regretted it. I would have felt like, well, of course you lost. The stock didn't meet 5 pillars of stock selection. And, it's a Chinese stock. This is one that is known to be very difficult to trade. So you know what? It popped up right here. It drops down. It comes back up again, drops down, comes back up again. So now you've got this flat top around 3. It breaks through, dips back down, pops up, holds that level, sort of, then pulls away to 350, dip, rips up to 454, dip, rips up to 450, jackknife candle, dips, pops back up, another little red candle there as it drops back down, and now rallying back up again. Hey, I'm glad to see at least something moving, but for me, I just couldn't pull the trigger on it. And so no trades on that one. Now, if we look at volume across the board today on stocks that are up more than 5%, HKD is leading the way. It has a lot of volume. Getty, second leader. I didn't trade this one either. It's 177 million share float. So this is very unusual that 2 of our bigger moves today were higher floats. But I think it speaks to the fact that a lot of traders, for lack of anything better to trade, are pulling the trigger on these. Now, I suppose that's better than, what was it, FC? There was a stock earlier today that hit our scanners. It's going to take a second for me to scroll back and find it. But it was a bit more thinly traded, and it popped up. Well, this was another one too, DFSC. This one popped up early this morning. No news on it. Went from 5 to 9. But then back down and then just been stair-stepping lower. So that one didn't really hold up. Then we had SSTK. This one popped up for a second. Float's too high. Look at that, though. Total rejection. Then NIVF, this one, we've seen this one before, can't trust it. FMFC, this one popped up, can't trust this one either. And so this was the trend that we saw today. We saw a couple stocks pop up, but they didn't hold. So when HKD hit the scanner, I was like, well, surely this is not going to work. Yesterday, BQ, again, Chinese stock makes a huge move, gives back all the gains. So I didn't expect, in a million years that HKD would end up going up 200% today, but it did. So, I guess that's better than nothing. But let's talk about what's going to really ignite the next round of momentum. And I'm talking about like some decent momentum. Typically, what it's going to be in this market, number one, shorts are going to be more aggressive because we're seeing a lot of reversals. In fact, we haven't really seen anything that's held up for multiple days since BYND. So as long as it's not a meme stock, I think shorts are going to feel very confident adding and adding and adding and adding until it reverses. It's an averaging down strategy. It's kind of like a martingale strategy where you just keep adding and adding and adding and adding to the loser until it finally turns around. And it can work, 90% of the time. And then the one time you lose, unfortunately, you can blow up your account. But that'll happen most likely if traders keep adopting that approach. But in the short term right now, they're going to feel like they're winning, and they are winning. They're going to feel like they're on top of the world because all of a sudden everything that they add short on eventually, even though they have to experience a little pain, ends up giving them that reversal and dropping back down. So typically what's going to happen is longs are going to stop participating because they're going to say, look, I'm sick of buying into false breakouts. This is a waste of my time. I'm losing money. I'm done with it. So people will stop buying these initial pops. So we're going to see fewer pops. And shorts are going to start getting a little desperate because they're going to see fewer opportunities. So when something does start to pop up, that desperation is going to lead them to start hitting it immediately. And so take HKD, for example. This pops up and they're like, oh yeah, hitting this, shorting it, and it comes back down. So maybe they cover some for a profit. It comes back up, they start adding. It comes back down a little bit, but doesn't flush below VWAP. Comes back up, okay, double top rejection, adding big time short here for the reversal back down, and then it sort of gets back above VWAP. And then adding here, and then adding here, and then adding or covering, or just keep adding. And now the cost basis is maybe, kind of moved up to this area. So they're still sitting red on it potentially, right? It's still well above VWAP. It broke away here, it pulled away. And they're kind of hoping this thing just unwinds and drops back down. And it probably does because this stock has got 125 million share float. But let's just say maybe this one ends up keep going or continuing and it keeps going. Or there's another one that pops up and they do this too, but the float is 1.2 million shares. And then you realize that the news is actually pretty decent. And next thing you know, it's going to 6 to 8 to 12 to 16 to 18 to 25 to 40. And you cannot just keep adding. And the only way to get out is to buy. And so that now fuels even more buying, which is short covering. And that is going to be the stock that ignites the next round of momentum. The stock that goes up 1,000% in one day or more. That's my prediction. And I could be wrong, but that's usually how these cycles begin, the next hot cycle. So right now we're in a cold cycle, and there are a couple ways to approach it. One is to keep showing up every single day and to keep trading with the same size you were trading during the hot market. And the result is that you're going to get really frustrated and you're probably going to lose money. Second approach is you keep showing up every single day, but you reduce your size and you increase your quality standards. So you're only going to trade things that are really good, but you're here every day. And if something does start to pull away, you'll get a piece of it. That's what I'm doing right now. The third option is that you say, I'm just going to give up and come back in a couple of weeks. And the problem with that, which some people will do, is that you'll miss the turning point. You'll miss that stock that finally, pulls away and opens up. And so it's one of these expressions they say with investing is that you can't time the market. So, when it comes to timing the market, you're like, oh, I'm gonna get out because the market's dropping, so then you miss this drop, but then you also miss the biggest green day of the year, right? Which is right there. And, it's not realistic to expect that you'll be able to get perfect out of the market here and then back in like right here. Even the best investors don't even try to do it because they know they can't. You missed 5. I think, what is it? There's a statistic that if you miss 10 of the biggest days in the last, decade, that it would have hurt your returns on the S&P 500 by like 50%. Just just those top 10 biggest days. If you had just taken all of those big days out of the equation because you were trying to time the market, it would have severely hurt your total returns. And so I think of that with day trading as well, that you just never know when you're going to have a big day. The days that I had this year that ended up being really big green days, some of them I, probably kind of saw coming because the market was pretty hot. We go back to the month of July, and obviously things were, really strong then. So it was fairly easy to predict that, so let me log back in. It was fairly easy to predict that I was probably going to do pretty well during that month. But, there were also some really great surprise days that I just didn't see coming. And I'm glad that I was here to trade them and to capitalize on them, because those individual days, made the entire month for some of these months. So we look at like the month of April, and, there's like 60,000, so a couple smaller days. Days like this, $175,000, that's an outlier. I mean, I was doing well, but then that's just, out of nowhere. This individual day, $278,000. I mean, if you took out my top 10 biggest days of the year, I'd be down. It would probably take $2 million off of my total profit on the year. That's 30% of my year from the top 10 days, right? So, that's the type of thing where, for me, it encourages me to show up every day. $232,000. I mean, it's just, these are huge days. Now, of course, big red days, they don't help, but that's going to happen. So now we've got the month of October basically in the books. I haven't imported my trades yet from Wednesday, so I've got to import those. But, it's not going to be the biggest month that of the year. It's in fact going to be my smallest month of the year. But that's in part because of one really bad trade, which is unfortunate. So now we're going into the new month of November. And so the question is, how are we going to approach the new month? Is there any reason to think that Monday things are going to be dramatically different from they were today? Probably not, if we're going to be honest. So I would expect that my approach going into next week is that markets will be slower, and I'm going to show up every day, and I'm going to keep trying to break the ice, build a little bit of cushion. And if we see something that starts to pull away, then, I'll step up to the plate and take some more risk. But if we don't, I'm just going to keep chipping away on small green days and maybe even no trade days while I wait for things to turn. And then once they turn, I'm not sitting on a big drawdown that I have to recover from. My account is at or near all-time highs, and I'm ready just to add some icing to the cake for November and December. So the month of November and the month of December are both typically strong months. December, we typically have, they call it the Christmas rally, Santa rally. So Decembers are typically good months in the overall market. And I'm hopeful that that'll be the case this year. Of course, past performance doesn't guarantee future performance. So we see trends in the market, but we ultimately don't know. So what I can control is how much I'm willing to risk and how often I show up. I'm going to show up every day. And for right now, I'm going to keep my risk tuned down a little bit. So if we continue to see choppiness, I'm not going to be giving back a ton of unnecessary profit. But I'll be able to break the ice, build a cushion. And if we have something that starts to pull away, then I can step up to the plate and take a little bit more risk. So that's my personal game plan for November, as we're kind of looking forward to the new month. I think, of course, different traders will approach it differently. I just, by the way, saw Jack posted this P&L here, which I love seeing. A really fantastic month. A couple red days, but the red days are small. They're manageable. This is a good looking month. Now, even though I made more this month than Jack, his metrics are better than mine. I have no doubt about it. His average winner, his profit loss ratio is going to be better. His accuracy is likely going to be better. And so the difference between me making 30 or 40,000 or whatever it is, and him making 10,000 is a function of share size. And if he increased his share size and started to ramp it up, he's not going to go from 10,000 to 40,000 in 1 month. That would be sizing too quickly. But if he keeps on this pace, he's going to be in a really nice spot a few months from now. So I love seeing this type of trading. Now you can see, and I think this is very common, look at the day that he's down $900. He took 35 trades. That's the most trades he took on any day. So even there, he fell a little victim to, I'm sure, FOMO, frustration, disappointment. Now, grand scheme of things, he wasn't giving back more than he had shown that he could make on, a decent day. $900 to $1,000 have been fairly common. But on that day, I imagine he got a little frustrated, and so that was a tough day. And this day, he had 16 trades. And yet, the biggest green day, let's see, $1,300, he took only 7 trades. That is interesting, right? So when it's hot and it's just working, it just sometimes feels like it's easy. It's all relative, but it feels like it's easy. And then days where you're struggling, sometimes we ask ourselves, why am I fighting so hard when the market is so difficult? And that's just our human nature. And on the other hand, when the market's really hot, it's also our human nature to take that profit off the table and walk away. And perhaps if there was ever a day to take 35 trades, it was the day that the market was going well in his favor. So something to think about for Jack, but of course for you guys as well, as you're looking at your P&L and analyzing the month of October. As I said, October for me, not anything that I'm particularly, proud of or pleased with. It was a disappointing month, but I'm grateful that I finished in the green, and I'm glad to put the month behind me and start a new month on Monday. So thank you guys as always for tuning in. If you haven't already subscribed to the channel, I hope you hit that subscribe button. I'm gonna put links to a couple recent uploads that have been really popular right here that you guys can watch over the weekend. And I'll be back at it live streaming 7 a.m. on Monday morning.